Hi everybody, thanks for tuning back in. My name's Lee, Crypto Mainly. Going to jump straight into the content today nice and quickly. Just trying to figure out what is Bitcoin actually doing, what is the plan, and where we are in the market cycle. I'm going to try and shed some light on that, and just give my opinion on the mid to long term. So this is going to be quite an in-depth analysis of Bitcoin today. So let's jump straight in. Okay, so you'll forgive me for showing you my scribbly chart. This is the chart that I trade daily, as you know. The people that have been watching since we've only started, we've only started the channel on the 20th of March, so it's only been going for a couple of weeks now. Got some really nice comments, some great feedback. 134 subscribers. That actually, when you compare it to some of the other influencers, it looks obviously insignificant. But if you look at the analytics of things, everything's going in the right direction. The views are up, the impressions click through, average view duration. So there's some real interest in the content, and so I appreciate you guys. Spending an average time of nearly 8 minutes for each video, which is absolutely fantastic. So if I go to analytics, it shows you 1,600 views already and 130 hours of time watched. So I'm really pleased with that. I know obviously it does look a little insignificant when you compare me to some of the other YouTubers out there, let's say, but I'm actually delighted with that. So let's get on with the content. In fact, what I'm going to do is I'm going to get rid of that pink one because it's not really any relevant anymore. So we're going to get rid of that. So this small purple triangle was the one that we're looking at, and I think that obviously I said that there's going to be quite a lot of skullduggery going on whilst we're in this zone. And sure enough, if you look at Bitcoin on a short-term time frame, and you go into the hourly and things, you can see the amount of chop. I mean, my view on this, guys. I was saying that there's going to be pushes up into this zone, and we've had a couple of the pushes up into the zone. We've got one. So we had our initial push above. Let me just turn my magnet off. One there, and one there. So we've had a few stabs up into trying to break through. There is a number of areas of interest here in terms of from a resistance point of view. So you've got this big, this descending triangle here. Let me just see if we can grab that make it a bit clearer for you. So yeah, we've got this descending resistance which we've been spoken about, which is significant. If you ignore this one peak as a false breakout, you've got a number of areas of rejection there. You've got rejection there. Okay, we did have a fake out, came back down, another rejection. We broke through here and then came back down and actually retested once we've broken down and confirmed as support. So an SR flip there. A huge rejection here, came back through and actually broke straight through. But then you can see again, you've got the resistance is this line. Although the support broke when we came back up against it, it then changed to resistance again. So this is going back for considerable time. If we look at the dates here, when we're looking at sort of March 2021, so we're now April 2022. So this trend line goes back a year in time of having flips from support to resistance. So or resistance to support, whichever way you want to look at it. But so it is a significant one. Okay, so the purpose of the video today is I won't go on about the same things here. You know what my view is on what's going to happen here. As I say, please watch the videos. I'll link a couple of videos at the end of this video today, so that you can just click straight on them and go to them directly. But I just want to, it's difficult to work out when Bitcoin is chopping around like this. People are wondering what's happening with the market. I actually, personally speaking, on a personal level, is I entered into a short position once. I added to the position here, and I added to the position again here, and now we came down, and you can see that there's quite a nice area of support here at this dotted line, and that's a considerable support. We're on the hourly now. If you go to 4 hourly, it also shows it's quite considerable on the 4 hourly as well. You can see that you've got a low here and you've got a higher low here, and obviously price is starting to break. So I've actually taken profits here from the 3 positions from the entries that I made at the top there. I've taken profits. So I'm actually taking a quick scalp trade long because I think we're going to come back up and retest and then come back down again. But I mean, in terms of what you're here for, what you're here for is trying to work out, probably in your mind, what actually is happening. we've got, it's very confusing when we've got this sort of chop going on. You can see, you almost had like you almost had like a pennant at the top there, which you'd expect to break to the upside. It then obviously broke to the downside. You then got, let me just take that off. You then got a pattern here which we were looking at, which could have possibly come into a W. We did break out above the neckline here. Sorry, that's very badly drawn. Excuse my scribble, but sorry. So that's the neckline there. So we did actually break above the neckline here. So again, you would expect to take a long position there if you were trading this, and only to find that in actual fact, that failed. It didn't stay above the neckline here. It actually had a good stab into the resistance zone again, but was rejected heavily. So you can see there's a lot of selling interest. I've got this green dotted line on here, which I've been speaking about for a while now, the 47,150 mark. So 47,150. If you look on a monthly scale, that is a considerable resistance, and that's why I had a feeling that we would take some attempts to break through. I'm not saying we can't break through it, because obviously anything can happen. You have to have a validation and an invalidation point. But for example, here, if we were talking about this here, and we were talking about an invalidation point, the minute that this changed into this bottoming pattern, where you've got, as I say, this W, and then you've broken out above there, that's the validation that you would be looking potentially to take a long there. And obviously you had a big thrust up into the resistance. Looked like it was going to break out, in fact, and rolled straight over, and a big rejection down to the bottom of the range again. And the same again on this attempt. We shot back up, we came back up into the resistance. Incidentally, none of these 1, 2, 3 have closed above that 47,150 monthly, monthly resistance. And if we look on the bigger scale here, you can see also, if I just zoom in for you so you can see more clearly, it's actually quite clear what's happening here, and it is planning. It is, I think the market is trying to trick everybody, as I've been saying for a week now. This is starting to turn into like an M pattern, which is a topping pattern. So you've got, a rolling over sensation followed by this, which, although it keeps trying to push back up, green dotted line again is the 47,150 monthly resistance, and as it pops back up and it's starting to roll over again. You can see that if you were looking at that, if we get down to the the 45,500 level, which is that level there, so the dotted line 40, you see that the turquoise color here, so this one here, so it's 44,500. So 44,500 to 45,000 is what makes up like this bar of resistance, which has been going on for a long while now. So this there's obviously so from 44,500 to 45,000. I hope make myself clear, and that's kind of the area that's been a problem for us to break through for a long time, and now we're finding support on there. But if this does turn into a topping pattern, bear in mind, guys, this is not financial advice. Please don't take what I say as gospel. This could well turn into a bottoming pattern and take off. But I suspect not. I think more likely is we're going to get this series of highs there, a series of lower highs, and then we're going to get one of these two scenarios play out. So yeah, I mean, it's difficult, isn't it? To establish in your mind what should you do. Should you be trading? Should you be trading the chop? Is it going to what's going to happen? The open interest is at all-time highs, by the way, so that would suggest that we are down. For, we are. The market is gearing up for a move to the downside, and it's going to be a considerable one. When I say considerable, you're talking at 20 to 25%. So just want to look at the macro side of things now, because I've done a couple of charts, over the past few months for my trading group. People have asked me time and time again, where are we in the cycle? Are we? What can we expect? And this is my take on it. And as I say, guys, different analysts will have different analysts rather will have different opinions. Please don't take this as gospel. All that I'm doing here is just presenting the data to you. So this is just data. We're just looking at the chart. on a log scale for the history of Bitcoin. Okay, now what we're looking at on the screen here is we've got the first, sorry, the first cycle, if you like. I've left out because it is a bit of an outlier. But if we look at the last two cycles, it is interesting to see that there is some information there that may be of use. Okay, anything can happen, guys. You know that obviously what with the geopolitical situation and all, it could be that the countries start like El Salvador start to pile into Bitcoin and into cryptocurrency, and then we may as well just scrap all the charts and throw them in the bin because they will be absolutely useless to us. That's how considerable. When you think about the global markets, for example, like the real estate market and things is in the hundreds of trillions. That's just real estate, and you think about the amount of actual fiat currency, money, so paper money and coins, which is in the world in circulation. And if you look at, in actual fact, the derivatives market absolutely dwarfs any other market in the world and globally. So, our cryptocurrency world that we love and cherish is actually a very small fish in the big ocean. So, bear that in mind, guys. We're looking at what's happened in the past. We're looking at repetitive patterns based on the, organic growth over the last 10, 11 years of Bitcoin, and that can be changed completely, especially with what's going on in the world. So, but let's have a look at the last two cycles. So, people ask me how long is this bear market going to? So, as we were coming down from November, people saying, "Oh, we're in a bear market. How long is it going to last?" All those sorts of things. So, I put this chart together, and you can see actually it's quite interesting. You see that the high in November 2018. So, this is the infamous run up. 2000 and sorry, this is the 2013. I beg your pardon. Bear with me for a sec. Yep, let me get the facts straight. So yeah, sorry, this is the 2013 cycle. So first bull run, if you like, is down here. I've just discarded that for a moment because these two are very similar. So if you've got the 2013 run up to the all-time high, it's interesting to see that the measure from the peak of the high in the 2013, so December 2013, the peak of that bull run. You can see here it's got 413, that should say days. I'm not sure. I think I might have changed the language by accident. Yeah, I have. Okay, let's see how we get on. so that should say 413D. That should be so 413 days, 357 days. And you can see, so from the peak of the cycle to the base, actually 413 days. So 365 days a year. So we're looking at just over a year from the peak to the new low, if you like, of that cycle before things took off again into the next bull run. Another interesting thing is that it took from the peak to the break of that previous, so the break of the previous all-time high, and therefore into all new all-time high territory. Demonstrated here. Obviously, you've got the high here, and we've got the break of that high here. Was 1190 days. So just bear that in mind. We go up to the peak of 2017. So this is the 2017 peak cycle that everyone talks about. And when it went up to 20,000, or just under 20,000 to be accurate, you can see yet again 357 days from the peak of that cycle to creating yet another new low. And then obviously organically things carried on after that. Obviously we have got the anomaly here, which of course is the virus and the pandemic and the effect that had on the global markets. So that is this area here is to be considered as perhaps as a black swan or a bit of an outlier in terms of things. But even so, if you look at the number of days, yet again, it's this cycle here, we're looking at 1190 days before it broke the all-time high, and this cycle here was just under 1100 days before it broke the all-time high yet again. And also, from high to low, it was very similar. High to low, 413 days. High to low, 357 days. From peak to breakout, 1190 days. From peak to breakout, just under 1100 days. So what I've done on this side of the chart here is just basically projected these these items here onto this where we are now. And as you can see at the top there, it says this, the 65k peak. On-chain metrics do suggest that the 65,000 was actually the top and was the peak, because that's when the retail investors started to come out of the market, and things like on-chain metrics like coin spend and all those sorts of things, profitability, all those things started to tailor off. And actually, this is almost like this was like created by the market makers, shall we say, and not necessarily organic or natural growth as this was up to the first peak. And the reason I say that, guys, is because at the end of the day, if you're looking at this from a technical analysis point of view, the 69k peak was a higher high. Okay, so you got a high, a low, and a higher high, and now we've got higher lows forming. So there is still the argument to say that this is still a bullish structure. We could come back up to the 69,000 mark breakthrough and continue higher. But I will come to that in a moment. If you don't mind, I'll show you another chart, and we'll go into that a little bit more detail. So please watch to the end, guys. There's lots of interesting information to come for those of you that are interested in deep dive stuff. Okay, so the 65k peak down the bottom there, if we had the 385 days, which is the average, the mean between of these two, so 385 days from the 65k peak would take us to us having a new low in May of this year, which is interesting because as you'll know, there's the phrase, sell in May, walk away. So maybe we have that event that gives us the the catalyst for a capitulation event in May, and possibly that would then be the end of this cycle and the beginning of this the bull cycle, this phase. But again, we'll come to that in a moment. The 69k peak is if we add the 385 days, same as I've done here, add the 385 days from the 69,000 peak, then that would put the lows actually as being towards the end of this year. So as you can see there at the bottom, the date is actually the 28th of November, down the bottom here. So the first projection, if you like, from the first peak is in May, as being the low in May, and if we use the 69,000 peak, that would put the next cycle low in November time. September is a particularly volatile month for cryptocurrency, and it tends to be a corrective month in certainly in my experience, and looking back through time. If you do any sort of back testing, you'll see that there are considerable corrections in September. So perhaps it'll be a little bit earlier than November. I think that towards sort of October, November, December time tends to be a very good time in the cryptocurrency world. So I would suggest possibly that it may be a little bit earlier than that. Going back to the projected, the breakout from the all-time high, the 1190 days there, 1100 days there, and then obviously I'm just doing the same thing. So from the 65k peak, just projecting out 1135 days, which is the average, the mean of these two, and the 69k peak there. So the same again, and it's interesting to show that what this is suggesting, based on these last two cycles, is that if we go by the 65,000 peak, then that's projecting the new high as being in May 2024. Okay, so just bear that date in mind for a moment. The 69k peak would give a projected, so the 69k peak, the measure of 1134 days, which is the mean of these 2 days, gives us a projection of December 2024. So think about this May 2024 one for a moment. I just want you to bear this one in mind. If we go by on-chain analysis and we take 65k as the peak, and this as being the market makers trying to fool us into thinking that this is going to be a bullish continuation pattern, just bear that in mind. This is the organic move. This is the organic move up until the 65k. We then had all the retail and everybody else all leaving. We had all sorts of on-chain metrics changing, and then we had the market makers, shall we say, I think, has created this move and created it so that it looks like a higher high than this move, so that it can keep us guessing for as long as it can as to what is going to happen next. Okay, so I might be completely wrong, guys. I'm just sharing my thoughts on this, so please bear that in mind. But just bear this in mind, this particular date, 65k is the peak. 1,134 days from the actual peak organically is May 2024. Just remember that date for a moment. So this is a halving cycle. This is the four bull runs that we've had going back to the beginning of time for Bitcoin. So this took me a long time to put together. It did actually change. Initially, I did I made a mistake in that because of the amount of on-chain sort of movement, coin spend, and that type of thing with Bitcoin, the halving date did actually move forward by about sort of 3 to 4 months. So I thought that we were actually not as far down the cycle as we were, which made some obviously recalculated everything and made some certainly changed my mind about where we are in the cycle and what we've got planned and what we've got coming. But this chart does show some very interesting things yet again. So this is going by the golden ratio, so 51% and 49% of a bull in the bull excuse me, in the bull market. So 51% of the time running up to the halving, so the red square is the halving, and 49% afterwards before we get to the peak, and then you get your bear cycle. So again, 51% of the time to your halving event, and then 49%. So 51% of the bull run is on the run up to the halving, 49% is after the halving, post halving. Then you get the bear market. So in the bear market, you've got 405 days there, 360 days there of bear market. Okay, so bull market. So the bull run number 3, which is where we are now, 51% running up to the halving, and then 49% after the halving takes us to November of this year. Interesting. When we were talking about perhaps the new, the new low for this this cycle is somewhere, possibly November time. So there's confluence there. You can see that from the peaks here, you've got obviously, from the peak of this time period, shall we say, you've obviously got the retracement through the bear, which is around about 365, so around about sort of 13 months. So let's say for a year for round figures, it's about a year to sort of 12 to sort of 16 months, shall we say. Same again here, same sort of thing here, and you can see you've got these bounces on all the way down. So there's a lot of action along the way, shall we say, and the same for this one. The cycle gave us a lot of opportunity, even though we were in a bear market. There were some bounces along the way. This is a logarithmic scale, and these look insignificant, but I can tell you these are not insignificant moves, and so I think that's where we are now. If we look at where where the halving is, the 51% of the time going up to the halving, and the 49% of the time after the halving, that would lines up with where the peak actually lines up with the second part of the peak, which was a 69,000. But generally speaking, if we go by one or other of these two peaks, 65,000 or 69,000, and we use this as a guide based on the previous bull runs and the previous cycles, there's there's confluence to say that we are going to be bouncing along and become lower and possibly put in a new low, towards the end of this year. And you'll remember that I asked you to consider the halving cycle here and this date here. Okay, so this is May 2024. That is 65,000 peak. Okay, the projection of the mean of these two projections before we break the all-time high. 65,000 projected out at the bottom here, you can see is May 2024. Now, what's interesting is if we go back to this chart, the halving is May 2024. Interesting point there. Just think about that for a moment. Now, another interesting thing, which I'm gonna bend the numbers slightly. Those of you that the eagle-eyed among you. I mean, if you're watching this video still this far in, then you are somebody that likes attention to detail you like the deep dive stuff, and if you're still watching, you will be one of the people that will be interested in this information, in this content I'm going to provide with you now. But you will also know that I am bending the numbers slightly. So if we look at the first halving, okay, and we look at the price action. So on the right side of the scale, you can see the price action. I want you to just bear with me, and we'll talk about $9 as being around about the price at the halving on the first halving. $9. Okay, just bear that in mind. I am going to play with the numbers slightly, guys, but you've got to remember this is not an exacting science. $9 first halving. Second halving. At the peak there, we're looking at $750, $800. So let's make that $900 just humor me for a moment. $9, $900. Bull market 3, $9,000. $9, 900, 9,000, $90,000, which will be a new all-time high at the halving in May 2024. So it's interesting. I think that we are going to see this type of scenario. Oh, I didn't mean to do that. This type of scenario where we've got a nice summer alt season coming. Everything is stacking up. We've got some corrective moves to shake some people out of the market first. But then we are going to get a nice alt season, I think, into the summer. We're going to perhaps go sideways while the alts have a rosy time. Similar situation for Ethereum. And then we are going to roll over and we're going to see the prices come back down towards the end of the year, November time, after the nice summer alt season. And we're going to have this new low, which is created in November towards the end of this year. And that will be then the start of this part of the cycle on each of these. Let me know what you think about that, guys, in the comments. I'll be interested to see. Some of you will be sitting there maybe and looking at this thinking, no, actually, that's wrong. He hasn't done this right. He could have done that better. I mean, please share your thoughts. I'm learning every day. Technical analysis is a fascinating thing. You learn every day. There's no doubt about it. So, do put your comments in the comments below. And as I say, because I've only got 135 subscribers at the moment, because obviously the channel's very new. I can read the comments and I do appreciate them, and it actually gives me some direct feedback. So thanks ever so much for that, guys. I appreciate it. So the last chart then, if you're still with me, thank you very much. I've been waffling on, but let's go for this last chart. Now this is the what we've got here is the 20 simple moving average and the 21 exponential moving average, which is the green and the red line. Okay, so the green line is the 21 EMA. The red line is the 20 SMA. So those two are better known as the bull market support band. Now I'm sure you've all heard of that, guys. If you haven't, it's basically the 20 SMA, the 21 EMA, and you can see it creates this band. So if I just remove the 50 for a moment, just so you can see what I'm talking about. Okay, so I've removed the 50 SMA for a moment. So let's just get that out of the way so it doesn't cause any confusion. This is the bull market support band. So you can see in history, the bull market support band, whenever it's, as long as we don't get any closes below the bull market support band, then the trend is a continuation to the upside. So bull market support band, if we fail and break below it, and then we find it as resistance, then we tend to have the bear market territory, which you can see on these previous cycles. What I'm going to do now is I'm just going to add the 50 moving average onto this chart. Now, why have I done that? Well, what you can see is interesting. These circles that I've drawn here is that you can see that you've got the bull market support band. The minute that the bull market support band drops below the 50 SMA, so the 50 SMA is the blue line, and you can see there that the minute that the bull market support band is the 20 SMA, the 21 EMA, and this green shaded area. But you can see when this green band passes below the blue line there, shall we say? Let me just make that a little bit clearer for you. I just need to learn to speak a different language. Sorry, excuse me just for one moment. Oh, God. I have no idea how to change the language. Okay, well, that brings back memories. D'accord, that's that. So this is French because that and premiers. I can read a little bit of French, and that means okay in French. I know that. So somehow I've managed to change the language to France, to French rather. But anyway, you get back going back to this 21. The bull market support band has dropped down below the 50 SMA, and then the what happens afterwards is you get this. So it happens inside the circle there. Once it happens, you get a 70% correction in the Bitcoin price. That's from the point of the crossover to the low, 70% correction. If you measure, obviously I've measured that from top to bottom, from the point of the crossover to the bottom, and you'll see that in actual fact that is 154 days. Sorry about the J, but 154 days, and it's a 70% correction. Just bear that in mind. Bear those numbers, 154 days, 70% correction after the bull market support band crosses below the 50 simple moving average. So the next one is here, and you can see the same again from the point of the crossover. I've measured to the low, a 62% correction over 168 days. Very interesting, very comparable. Even the COVID black swan. Now this is a little bit of an outlier, but having said that, let's look at the numbers anyway, because the facts are that the bull market support band crossed over the negatively crossed below the 50 SMA. So don't forget the blue line is the 50 SMA. So the same thing happened again. What happened? A 54% correction. This one is a little bit different to the others. It happened over 14 days. It was very sudden. It was very harsh. And and we all know that was as a result of the black swan event, shall we say? But it is interesting nonetheless that once that crossover happens, there's still a 54% correction. Right. So what does that mean for us now? Let's have a quick look. Let's zoom in and see. Have a really good close look at this. So what you can see is the 20 SMA is crossing below the 21 EMA. Okay, so the red line is the 20 SMA and the green line is the 21 EMA. Okay, so you could argue that the 21 EMA is crossing back above. Okay, starting to cross bullish. You could argue, there is a point to argue there. You could argue that the 50 moving average could argue that the price action now is above the 50 moving average. And that's a little bit unique. That's a little bit unique for this cycle. That has not happened in the past. So, having said that, you can see the 21 SMA has crossed below the blue line, which is the 50 SMA. The 21 EMA has crossed below the 50 SMA. So the bull market support band is below the 50 SMA now. And we all know what's happened looking back at these last events, what this could mean. Okay, so let's say, for example, we're talking about a 70% correction from the point of the crossover. Okay, and we're also talking in terms of the number of days of 168. I think I'll check that in a second. 168 days. Let me just check my numbers here. Sorry, just check that. So 62% and 70%. So we'll go 65%, shall we say? 65%. And the number of days is 154 and 168. So somewhere in between is, where are we? Just roughly speaking, so 160 days, shall we say? So we're going to talk about a 60% correction. And we're going to talk about 168 days. So the point being is that we've got 168 days from the point of the crossover. It's only just happened, the crossover. So 168 days is, what is it? In months, my brain's not working. 3, 4, 5, about 6 months. So we could have sidewards and gradual downwards action for the next 6 months, which would take us up until October. Interesting when we look at the fact that we're looking at November as being, the projection for the low of this cycle here. We're looking at November, and now we're looking at October, November time. 168 days, in actual fact, comes out as the 5th of September. And interestingly, as I said earlier, September is a month that traditionally is very bad for the markets, for Bitcoin and cryptocurrency included. Interesting. It's 58%, so 60% correction would take us back down to 20, close to 20,000. I don't think we're going to get to 20,000. I think that the lowest that we'll get is somewhere between 22 and 24,000, somewhere around that region. But I think it's going to happen, and I think it's going to happen towards the back end of this year. And after the September to November corrective capitulation event will be the start of the next cycle and the run up to the new all-time high, which will be 2024 in May at the time of the halving, and then we'll be on to prices well in excess of 100,000 in the next cycle. Thank you very much for listening. Appreciate you all making comments and liking and subscribing, and I appreciate everything that you've given me the opportunity to be able to present my thoughts and this technical analysis to you, which I genuinely appreciate, guys. Please protect yourself. Don't fall into the trap. People are going to be celebrating the fact that we're above the bull market support band. Okay, they're going to be celebrating the fact that that's happening, because it is happening. We are above the bull market support band even now, and we have had weekly closes above the bull market support band. So does that mean we're out of, is that, should we start to celebrate now? Excuse my phone. Or, have we had closes in the past? Sorry, just bear with me for a second. Sorry about that, guys. My phone is going absolutely crazy. Oh, that means something juicy is happening in the market, maybe? A quick look. Not really. So sorry, where were we? We were talking about the fact that, that we're above the bull market support band now. Okay, so when we've had these crosses in the past, have we had a close above the bull market support band? Yes, we have. What happened afterwards? Downwards. Have we had a cross bull market support band above the bull market support band here after the cross? Yes, we did. Just there. What happened afterwards? Move to the downside. This, the COVID Black Swan, was a cross and confirmed support above the bull market support band. What happened afterwards? Cross to the downside. We are now above the bull market support band. We are below the bull market support band is below the 50 moving average. You will also note that the bull market support band is on a downtrend. This is down sloped in the same way that it has been for this move and this move and this move. Guys, be very careful. Don't fall too much into the trap and the hype. Everyone will get excited, and don't get me wrong, there is a fantastic alt season coming for this summer, but do not fall into the trap of leaving yourself too exposed, not using stop losses, and not being sensible with your position sizing and your risk management profiles. All the best, guys. Take care now. Always remember, take profits and buy something real. Cheers, guys.
Bounds.